Hello everyone, and thank you for watching. Well, the Alberta government has just released its budget for 2021 to 2022, and it's about as bad as we all expected. Our province will run a deficit of $18 billion this year, and our province's debt will increase to over $115 billion by the end of next year. It's an awful lot of money, and in our video today, I will talk about the impacts the budget may have on Alberta's real estate market. So far, Alberta real estate is off to a good start in 2021, but will the announcement of this new provincial budget throw a wet blanket over our real estate market just as it's starting to heat up? Well, let's find out. Okay, well, I don't think it's news to anyone that Alberta is going to run a deficit this year. The COVID-19 pandemic has posed huge economic questions to government institutions all over the world, and Alberta is struggling for answers just like everyone else is. To actually fight the pandemic, the government of Alberta has budgeted $1.25 billion this year. But the pandemic is only part of our problems here in Alberta. We have also had to endure a very challenging period for our energy-based economy, and in order to meet the same standards of service that our citizens have become accustomed to, our governments have had to resort to substantial deficit spending. Making a bad fiscal situation worse, the deficit spending has resulted in Alberta's debt increasing dramatically over the last several years, and along with it, the costs of servicing this debt. What this means is, just like the interest expense on a homeowner's line of credit, the debt servicing results in more and more of our revenues being needed to make the payments on the debt load that Alberta has accumulated. So it's definitely something to watch for, and it will be important for Albertans to hold their politicians accountable to keep this from getting out of control. Now, generally speaking, if revenues are increasing at a greater rate than the debt servicing cost, then governments can feel a bit more comfortable with increased deficit spending. But even with historically low interest rates in place, that isn't the case for Alberta in 2021, as revenues are forecast to fall, as Alberta, much like the rest of the world, comes to grip with a new post-pandemic economic order. But what does all this bad news and these huge numbers actually mean for the value of Albertans' homes? The Canadian Real Estate Association has forecasted a good year for Alberta real estate, projecting prices to increase by as much as 7%. So does this bad news budget change all of that? Well, I don't know if we'll see prices go up by 7%, but the short answer is no. It doesn't change our positive outlook for housing, because a lot of this spending is finding its way back into Albertans' pockets by way of increased government spending on infrastructure and social services. Alberta has a 3-year capital plan of over $20 billion, with 50,000 direct and 40,000 indirect jobs being created through to 2024. This matters a lot more to key factors that affect housing, like employment and migration, than a large overall debt does. So just because Albertans are seeing red on the budget, it doesn't mean that expectations should change for Alberta's recovering housing market. Another reason that Albertans can rest a little bit easier is that this increased government spending is not unique to our province. Everyone is getting hammered out there because, as we've seen, the pandemic knows no borders, and institutions around the world are facing historically challenging economic conditions. Now, if there's any good news in all of this government spending, it's that Alberta is still in a better position than many other Canadian provinces. One of the metrics that provincial governments watch closely is the percentage of overall debt relative to the gross domestic product, or GDP, of that province. And by that account, we're really not so bad, as Canada's 3 most western provinces have considerably less debt than Western Canada or than Eastern Canada, and then less than half of that you'd find in Ontario and Quebec. So Alberta has quite a bit of borrowing room left to go in order to be in the same indebtedness level as Ontario and Quebec. It doesn't make it okay to take on so much debt, but with respect to Alberta's housing market, I don't see a lot of risk given how strong Ontario's housing market has been despite all of the provincial debt incurred in Canada's biggest province. Now, what should we be watching for in Alberta? Well, just like the market for any product or service, it comes down to supply and demand, and I am keenly interested in the demand metrics for Alberta real estate. The recovery and demand growth for our housing sector has been building for many years now, and one of the most important things to watch is net migration, or the amount of people moving to our province. Net migration had been slowly trending upwards until the pandemic started in 2020, when everyone across the world hunkered down to weather the COVID-19 storm. Now, just as governments everywhere try to get back to normal and Albertans, just like everyone else, try to figure out what this new normal looks like, it will be very interesting to watch if our positive net migration trend returns and demand for Alberta real estate increases. So we've spent a lot of time in this video talking about some really high-level factors that play into Alberta's budget and housing market. But real estate is highly sensitive to localized factors of supply and demand. No two properties are exactly the same, and Alberta's real estate market is made up of countless smaller markets throughout our beautiful province. So if you'd like to know what your house is worth or what the market is like for buyers in your community, well, please feel free to contact a Redline Realtor to get up-to-the-minute localized data that would be more relevant to your decision to buy or sell. Thank you very much for watching, and we'll see you next video.